Welcome to the Canadian Self-Storage Information Podcast with your host, Patrick Wood. Just wanted to cover some housekeeping stuff at the beginning here. This podcast is in no way to be associated with my work at William Wright Commercial Real Estate. It does not represent the Real Estate Council of BC, and the opinions expressed here are that of my own and my own alone. I appreciate you guys tuning in. Please feel free to reach out to me at the contact information provided below with any self-storage questions. And with that covered, let's get going on the podcast. Hello, everyone. Welcome back to the Canadian Self-Storage Information Podcast with Patrick Wood. Interesting topic today. I was cruising through LinkedIn, as I do every day, to see if there's any storage news that I need to follow up on or that I had missed in the past week. And I saw that Storage Vault Canada had released their 2020 financial results. And this is always interesting because they are the only publicly traded storage company in Canada. So they give us a bit of a snapshot into what's going on in the market with some data that anyone else in the market isn't really required to divulge. So I just wanted to review those and talk about how that impacts the storage market in Canada moving forward. I do want to start off by saying this is not financial or investment advice, as we'll be talking about stocks and stock value and what's going on within the company, and I don't want anyone to take this as investment advice, and if it doesn't work out in your favor, to blame me. So I want to get that out of the way. I also did want to disclose that I do hold some of Storage Vault Canada's stock. I purchased it on the open market at market rates when I did purchase it. I do not have any inside information or insight into the company other than what is publicly available. So there's no insider information going on here, nothing like that. So I wanted to start off by talking about the stock performance. In January 2020, Storage Vault started the year at $3.84. The 52-week high for Storage Vault Canada was $4.30, and the 52-week low was $1.90. That was a quick drop in March that actually triggered a halt from IROC, which is the overseeing body of shares traded on the venture. It halted trading for a brief period of time, and then we saw a quick rebound back up to the previous numbers. Not quite sure what caused that. Could have just been some weird market activity or some high-frequency trading that went awry. But needless to say, the Storage Vault Canada stock recovered immediately from that. As of today, February 25th, 2021, the Storage Vault stock closed at $3.99, up from $3.80 this morning, about 7.85% on earnings news today, even though the TSE was down 1.4% and most other markets were also off today. Some highlights from the earning report include Storage Vault Canada completing on $232.7 million of acquisitions in 2020, same-store NOI growth of about 5% for the year in total, and revenue growing up to $155.5 million for the 2020 year. When looking further into the financials, we can look at the entire year versus what was released for Q4. It's very clear that COVID-19 had major impacts on Q2 and Q3. Q4 saw same-store NOI growth of 6.3%, which is above the full 2020 results of about 5%. This shows how bad Q2 and Q3 were, which is when most of the country was in full lockdown, including Ontario and Alberta, where many of their new acquisitions and base of stores have been. Ontario has definitely been harder hit than other parts of the country, like BC, and in the first few months of COVID, and then again in the summer and into fall, there have been rolling sort of lockdowns that have impacted day-to-day activity, real estate activity, and business activity. This has had a negative effect on most industries, and despite this, Storage Vault Canada has been able to show very good year-on-year results. This should be very encouraging to any investor in Storage Vault Canada or in the self-storage market or industry as a whole. What do these numbers mean moving forward? Well, it shows that SVI has had very good success in both increasing occupancy across the portfolio, even during a pandemic. My understanding is that they've increased occupancy by a couple of percent across the portfolio as a whole, with some areas showing better growth than others. This is great, seeing as how there's been a lot of headwinds in being able to bring new customers in the door. We've been able to see how good their revenue management system is working. It seems like what they've implemented has been working as per the numbers. They've also been able to switch to a lot of online processes and contact processes, which in the long run will save them more money, but also allow them to spend more money on targeted marketing to their customers because they'll get more data on the customers. In their financials, Storage Vault did note that they plan to do about $100 million in acquisitions in 2021. This is less than half of what was done in 2020 and may speak to the more competitive environment taking place in storage transactions right now, or just a renewed focus on the revenue management. They also mentioned that they plan to renovate and expand and upgrade certain stores, and results of those actions shouldn't be seen till 2022. I expect that in 2021, we will see slight upward trends in Q1 as certain provinces reopen. Q2, we should start to see a greater rebound in the economy as a whole, but also in storage use as more vaccines get out, less lockdowns, more economic activity happen, and people start doing business again. Q3, typically sort of the end of summer into fall, is one of the stronger quarters we typically see in storage. And with a rebound that should be taking place due to COVID restrictions being lifted and economic activity increasing, this should continue to be strong. I would also keep an eye on the Alberta market, as Storage Vault is very heavily weighted in Alberta right now with new acquisitions and existing product. Their acquisition of Real Storage and Sentinel was very heavily weighted in the Alberta market, and Alberta has yet to see a major turnaround in their economy in the last 5 years. There have been certain glimmers of hope, but nothing has really been on the upswing, and COVID definitely took away most momentum. If we look at the drivers in Alberta, it looks like construction is going very strong right now. I was just in Calgary last week, and there's a lot of new industrial building taking place, as well as single and multifamily, which is always great. Population is still growing. Additionally, the price of oil has been above $60 for a week and a half now, with Western Canadian Select, a lot of the oil that comes out of Canada, being very close to $50 a barrel. This strength in the oil and gas industry should help the province recover and may, in the near term, make people want to invest in the province again. The cancellation of Keystone XL definitely was a negative thing. However, Trans Mountain expansion, or TMX, is continuing. That should have positive effects in Alberta starting in the end of 2021 into 2022, and we look to see the recovery in Alberta really buoy the same store NOI growth and occupancy growth in the SVI portfolio. SVI also has a lot of stores in Ontario, and when the lockdowns lift, we expect to see business increase there dramatically. All of these things point to a very good 2021 for Storage Vault, and I would expect to see their shares probably bounce back to all-time highs within the next quarter. Even today's bounce of almost 8% on good financial news against the headwinds of a falling market really speak to how some people, especially institutional investors, really see the storage market, and as a result, Storage Vault as a very good investment for the mid to long term. Thanks for stopping by and listening, and hopefully this gives you some insight into the only publicly traded storage company currently in existence in Canada. Although it isn't a complete picture of the market, it definitely does give us a snapshot of what Storage Vault is seeing, which, from my conversations with many other operators across the country, is indicative of what's generally going on within the storage market. Some operators who decided to close during the beginning of the pandemic and not offer any rentals definitely would see not as good a results. Other operators who are not as heavily weighted in areas that have had heavy lockdown measures to stop economic activity probably will see better results than this. I know here in BC we opened up fairly quickly and we haven't had to have a full lockdown since. Alberta is coming out of a lockdown a few weeks ahead of Ontario. Saskatchewan and Manitoba did have very strong lockdowns, but they've rebounded out of that fairly well. And, so it's going to be very area dependent. Please feel free to reach out to me if you have any more questions. Contact information is below. We're going to be trying to do this more and more frequently. We have a couple other topics that we're currently working on, so look forward to getting back with you again shortly. And thanks for your time.